So you know you're being recorded. Your vehicle is so he'll get you in and out of it, but
All right, we will call this meeting to order and roll call.
Secretary Hall.
here.
Superintendent Basler. Here. Treasurer Beadle.
Here.
Attorney General Wrigley.
Here.
Governor Armstrong.
Here.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice.
All right, consideration approval of the September 24th minutes.
Move to approve.
Second.
Discussion. All in favor?
Aye.
Opposed? Motion carries. Operations, Joe.
Thank you. Good morning, Governor. Board members. Not sure, but it may be there's last with us, so we'll see.
Who knows?
Looking
Near a
better.
little bit, so
Is it
What I read this morning.
just in time?
Yeah. Next week. Thinking next week. So.
So as an aside, this is one of those areas where the Senate forgets there's an entire chamber on the other side of the Capitol. Did you read anything about the House agreeing to it being next week?
No.
No, me neither.
Okay.
Just so everybody's aware, civics lesson.
I met with 3 House members yesterday, and they told me that they anticipate sometime after election on Tuesday that they might have a deal. 2 of the 3 said sometime next week after Tuesday. The other one said probably closer to the 21st when the CR runs out.
Oh.
Wow. All right.
So they don't know.
That's
anything.
may not be the last meeting.
That's the time to decide.
Well, I'll move on to my commissioner report here on page 2. Just a couple items to. I did attend the Retirement Investment Office. They had their annual investment conference. I know Treasurer Beadle was there too. Held in Bismarck here with a nice event. We had a good discussion and a lot of good education about the investment board strategies and different policies that the legislature's enacted, how those correspond with the policies and strategies of the investment board. And there were a lot of fund managers and investment professionals there, so it was a great opportunity to collaborate and network as well. We, our team, it finished recently last week running around the state doing all the surface auctions. It's that time of year. So we had a good slate of auctions all around the state, and the team will be here to provide a full report on that at the December meeting. Our annual financial audit is complete. I'm pleased to report that it was a clean audit, no findings. And Ide Bailey will be here to provide a report on that at the December meeting. The one open position we have is our revenue compliance director, as I reported last month. We did have a good slate of candidates, and we conducted interviews the week of October 12th. We do have a finalist selected pending a background check with all the financial transactions and large ones they deal with. Do a full background check on them, so we're waiting for that to come back, and I'll report to you when we have that. Any questions on my commissioner's report? Okay. If not, we'll go on to the next division reports, the surface. On page 3, we processed 13 right-of-way agreements in September, generating just under $400,000 of income for the trust. This photo is interesting and unique. It's actually a boat landing on state trust lands in Stutzman County on Stink Lake. And just kind of a couple points of interest here. We actually do have 3 boat landings that are on trust lands. We've done those in collaboration with Game and Fish. We have one on Sunset Lake, Kidder County, one on Rural Lake, this one here on Stink Lake in Stutzman, and then we're also working on a potential another one with Game and Fish in Kidder County. So kind of just an interesting set of facts there that a lot of people don't know.
Can we increase the trust land value if we rename the lake?
I don't think that's in my purview.
Okay.
Renaming lakes, I don't think so.
So moved.
I do not know the history of how it became known as that.
Ask Kayla what our experience was.
They're probably proud of it out there, so maybe they don't want,
Maybe,
maybe they don't want to change that. But all right, on the minerals side, I'll go through the numbers here. We had another pretty good month in September. We still generated in that 30 some million monthly royalty revenues in September. We're trending a little bit behind last year, 107 million versus 121 million year to date. And if you look to the next page, page 5, kind of charting out the long-term trend of oil and gas royalties. Like I said, we're still holding steady. A little bit of, if you look at the longer-term trends, as we know, the prices come down a little bit, but the production has remained steady to a little bit up. So that's kind of keeping us steady. Any questions about those numbers? Okay, we'll move on to, we did have our October, we do 2 a year now, oil and gas auctions online. We have that come through here in October. So I will have our minerals director, Chris Selsley, provide an update.
Yeah, so second auction of the year, really big auction, considering what we've been seeing in the past few years. We had 708 total tracts, 64,000 acres. The high bid per tract you can see was almost 5 million. Keep in mind that we only lease on quarter sections going forward. That's due to not having a few clause. So those leases, they don't have to be tied to bigger units if they don't get drilled. The high bid per acre was 14,500 per acre, which is a really good bid. And the total bonus we received was almost 50 million. So that's
14.5. That had to be existing production.
no, it was planned production. So there was leases where they didn't qualify for an extension, but in the next 6 months, I would say 6 to 9 months, there's going to be wells drilled there. And there was AFE, we were AFE'd. So there was existing authorization for expenditure, basically saying, are you going to participate or not? So people knew that. We put those out on the auction site. So we were transparent as we can be, and that really drives up the price. So I do think in those cases, in some of those cases anyway, the operator ended up bidding on those. They had it before, but they also required it. So yeah, it really drives up the bonus price per acre when the production is very close to there and they know that production is going to. So on to the next slide, I guess you can see on the map on this slide too where the acreage is located. We can take questions on that if you do have questions, but on to the next slide, so you can see by county total bonus where the main minerals were located. There's a lot that were up in Billings County that's still pretty speculative, but it's getting a little bit more popular because of the economics involved with 3 mile laterals and the new technology for. So that helps.
Someone's drawn to an inside straight and slope.
Well, yeah, there's some speculation going out there.
That's the old Tyler stuff.
Yeah, and I don't I did ask. I always ask. They might share with me some stuff, but they were kind of playing it close to the vest, which I expected them to do. But there was a couple of new wildcatters out there that were like, "Hey, we're gonna slope and start. We wanna get down here." So yeah, there was some. As you can see, the bid per acre is really low there, so a lot of them go for $1 an acre. But hey, they've got an idea, and we like for them to come and try it. So it's a cheap way for them to get some acreage to try new things on. Common Schools Trust Fund here obviously was the main beneficiary with 40 million going into there for just the bonus, and SIF was 7.5. On to the next slide. You can see we still do by year. There's some differences here just because we did I wanted to consolidate the auctions. It's a lot of work for our team, but also I think you get auction fatigue, and we hadn't been seeing a ton of parcels nominated sometimes. So I think for the last 2 years, we've done 2 auctions a year, and I think there's been some benefit. Obviously, you can see this year is 63 million. It's the best we've done since 2012, even despite low commodity prices. So that's encouraging. I think there's a few things that come into play there, and one is technology, and I think also that private equity has been back into the space. I do think the consolidation is good too, because people are looking to shore up acreage that they can get at a reasonable price around the core positions that they have. And also, I think, we've been good at reviewing our leases and getting them back out there in the market when they haven't produced. So the turnaround on that has gotten faster. So yeah, kudos to my team. This auction was a lot of work because of all of the acreage. So thank you, Lynn, and thanks to the other individuals that are involved in getting that completed. And thanks to EnergyNet, they've done a good job at advertising and marketing our auctions. So they will be here early next year to do a presentation to get more in depth on what other states are doing and what the differences and things like that, and how we can maybe maximize our values for our lands. Again, the last slide we have on here for the auction is just more of a recent look back on the individual auctions that we've done. But the bonus has largely gone up over the past couple of years. Of course, you got to take COVID out of there. So yeah, it's been good, but I'll take any questions if you have any.
Christine talked about Divide and Burke counties, because I see they were pretty high yielding.
3 mile laterals, Divide and Burke. Those guys, Liberty and a couple of other companies, Coda Resources, and there's some other operators out there that really figured out how to make 3 mile laterals work where the fracking is good enough, especially on the end of the lateral, that they're not losing that production way down the line. And that really changes the economics of drilling wells up there, because you're having to poke less holes in the ground. If you can drill 6 wells instead of 10 or 12, those and still maintain largely the same production, it's a lot less capital costs, $9-10 million to drill per well, rather than, and then you save, $9 to $10 million on those less laterals. So your development cost is really what's driving that, and that's just the technology of drilling and fracking. So I know that we want more rigs out there. because they're their own little economies, but they've gotten so good at drilling those wells. They're just not needed because you can still drill it 10 days, 14 days, and they can do longer laterals. It's just going to mean less holes in the ground. But that's Billings and Divided really been the drivers up there for that. That's what's benefited those two counties from what I see.
Okay, thank you. Any other questions for Chris? Okay,
Thanks.
all right. We'll move on to unclaimed property. I'm gonna have Susan, our unclaimed property director, present that because we have a new program that we're starting there. So.
Exciting. Morning,
Morning.
Mr. Chairman, members of the board. Just real quick, for the month of September, the division paid 422 claims for 385,000 returned to rightful owners. We received 200 holder reports for 1.6 million coming in. That's the claims numbers are down a little bit from what they had been, and that's this is a more normal number. The last 6 months have been kind of a whirlwind with money going out. But the exciting part is during the last session, the legislature tweaked our verbiage just a little bit, which will allow us to send checks out without the owners having to file a claim. And what that means is we select a population. In this case, we're starting with what's remaining from report year 2023. And it's a pretty particular population. It's properties that are between the value of $50 and $1,000. But those properties have to come to us with some personal identifying information, a social or a date of birth, something like that, so that we're 100% certain we're sending it to the right person. Then our vendor will take that population and bump it up against LexisNexis, and then it will just pay the claims. And then we tell the treasurer's office, write these checks, and then they'll go in the mail. But leading up to that, we're going to send a letter to those owners so that they don't get this check and go, oh my gosh, what is this? This has got to be fake. And so that's the reason we chose that dollar value, is so it's big enough for them to run the errand and cash that check, but not so big that it looks fake. We'll also do a press release at the same time we send out those letters so people aren't alarmed. Because in our case, it does give the appearance that it's could be a scam or fraudulent, and we want to get in front of that and eliminate some of that. So
Michael promises to believe you. Do we have it like Kelly Cash bucks that are on there or something? Or?
No, I have two questions. One, if you get a return to sender on the letter, I'm assuming you'll figure out whatever that metrics looks like. And then two, when you send the check, is there like a call to send?
yeah, and when we send those letters, we already know a certain population are gonna, like 25% are gonna come back as undeliverable. Then we will remove those.
Okay,
And we
yeah.
will not send a check because we already know it's a bad address, and we're not gonna
What?
do that.
Why is it shifted to the, if we have the identifying information, why doesn't that just stay with the vendor, or not the vendor, the private entity that has it? Why do we have to be the middleman? You're sending it here, you're saying it's got the personally identifying information. Who are these? Are they banks?
It's literally anybody that's doing business in North Dakota. And I would venture, I guess, that only about 25% of the property that we get actually has social or a date of birth. And that's because though it's the vendors that are the banks and the financial institutions and other insurance that have it. A lot of them don't.
Or the
even
ones that
it.
have gift cards like Lululemon, where people occasionally forget those and have to claim that the Attorney General might
Right.
remember.
Thomas, I'm gonna get you something so nice for Christmas from Lululemon.
I appreciate that. I'll piggyback on what Susan said. So this is something that a couple other states have done just in the last year or so. Mississippi did it with great success, cross-referenced the data that they had to income tax collection data. So they were able to mirror that and get stuff go out right away. A few other states have started doing this. This is becoming best practice in terms of what states can do to really see success with the unclaimed property program. And so kudos to Susan for getting everything ready so that we can do this here in North Dakota as well.
Yeah, I think Wisconsin was the first state to do it, and the reason it was easier for them because they are housed in their tax department. So they're already sharing that information. But yeah, like he said, we're not the leader on this endeavor. But it has been wildly successful. And what I think we're gonna see is the number of claims paid is gonna increase. So our workload is gonna shift. We won't be managing processing those claims. We'll be managing the return mail and the return checks. Because there will be some.
And this will be like a pilot project. We'll see how it goes. We'll provide a report to the board and then we'll plan to see if it goes well, we'll ramp it up there. So,
Yep.
yeah.
It's a great idea.
See what we can handle. Some of the other states send out a population every week. And that's just that's how they operate now. So,
We should do this like property taxes. We should have a note at the bottom, say, Michael Howe is sending you this check for $40 and
and to
Well, my
answer your
signature's
other,
already on the check, so it's okay.
yeah, to answer your other question, Mr. Chairman, we will be sending an insert with
tax.
the checks that says, if you think this is fraudulent, go here and look, okay, and you'll be able to see it.
The problem is people are so in tune to, you have a postage delay. Like clicking on links, I mean, this won't be a link click, so they'll actually have to type it in.
Yep.
We're getting farther and farther away from phone calls, which I understand, but eventually, I mean, let's see how it works, but I think like
There'll be a number there.
I'm
click,
confident that when the first wave of letters goes out,
you're gonna get a ton of calls.
we're gonna get a ton of phone calls because they're gonna go, this is fake. This has gotta be fake.
Yeah.
And we are putting our phone number on there. So that they.
Please check the link first. If you're
Yeah.
still not comfortable, call her, because I don't want you guys inundated with calls either, but it's one of those areas. I mean, everybody who has a cell phone has got a link saying the US Postal Service, and they click on the link and it looks like the Postal Service.
Right.
Everybody's getting jaded though. They'll be like, yeah, right. So you can drain my whole account. No thanks.
That's what I mean.
Yep.
That's what I mean. Now it's paper form, so they have to go type it in, which is a different deal.
Yep.
So when Susan brought this to our office too, and we started talking about it, we did let our special attorney general know about this as well, because we know that whenever we have stuff like this go out, when we send out township money or whatever else, we always have a few dozen that contact like the Consumer Protection Division, thinking that it's something scam and something. So we made sure to let our attorney general rep know about this stuff going out, and I think Susan, you were doing the same as well, just to make sure that Drew's office had those people, because we know that they get calls too.
Yeah, I missed that one. I didn't let the consumer protection know.
It's a great idea.
Yeah, for sure. Yeah.
You have a ton of this stuff. I mean, for as good a work as you do, you guys have a ton of this stuff sitting there that people just don't ask for.
Right.
They just don't ask for.
And on another note, tomorrow is our annual deadline for the money coming in. Our annual holder reporting deadline is tomorrow, so we're just watching the money come in. So we're at about 19 million so far for this report year, which is right on target with where we were last year. So.
Okay. Thank you. Any other questions for Susan? Great. Thanks, Susan.
Thanks, Susan.
Thanks, Susan.
Welcome.
Wrapping up the division reports, financials will provide both recent financials at the next meeting. We always have a typical pause when we're finalizing our audit. So we have that done now. So we'll be able to present those at the December meeting. And now we'll move on to investments. We have our Chief Investment Officer, Frank Mihail here. So Frank, why don't you go ahead and take it away?
Thanks, Joe. Good morning, Governor and Land Board. Just in case this is your last meeting, Superintendent Beza, I want to thank you for your service and commitment.
Appreciate it very much.
Online, we should have Jen Sandberg, Kirby Francis, and Jen Call from Andreessen Horowitz, who will be handed to in a little bit when we get to the recommendation. But I'll get started on slide 11 with the asset allocation update. portfolio stands at 8.4 billion as of September 30. On slide 12 shows the allocation relative to targets. These targets have been updated to the new strategic asset allocation targets that were approved at the last board meeting. So you'll see that what stands out is the underweights to private equity and infrastructure. And so the investment staff is going to be working on some recommendations over the next 6. Pretty busy with investment recommendations in those asset classes. On slide 13 shows the flash performance report. Portfolios up 10.85% on the 1-year period as of September 30, led by international equities, and followed by U.S. equity and hedge funds, adding meaningful performance to the portfolio. On slide 14 shows the uncalled commitments. We made some capital calls in the last quarter to private credit and infrastructure, which brought those outstanding commitments down. And we still have a substantial uncalled commitments to the private equity asset class.
And Frank, we had some pretty substantial ones in the past couple months, right? Because that was closer to like 900 million, wasn't it, before the outstanding uncalled?
Yeah, that's right. It was it was over $1 billion at one point. We had about 300 that went out to private credit and then another 100 infrastructure. And then on slide 15 shows the liquidity waterfall. Not too much change there. Is there any questions on the dashboards?
Let me know when you want me to insert my question. When is this all going to turn around? Because it's been going up for so long.
Yeah, that's the $1 million.
Yeah, I know. That's the only question I know. No, looks great.
It seems like it turns around for a day and then goes right back up the next day.
Yeah.
Yeah, we've been discussing that as a team, and there's a lot of discussions out there, but it kind of gets back to it's very concentrated. There's 7 to 10 stocks, these mega cap tech stocks that are really driving the indices. And if you look under the hood, below those 7 to 10, the market isn't as broad as we would like it. So you are getting a lot of these, being driven by these big companies, and there's just another big boost with all these new AI infrastructure deals, and that kind of gave a big boost to all these companies again, and so it kind of just keeps feeding on itself, it seems like, for now.
Yeah,
you're right, but it won't go up forever.
And well, the Fed cut interest rates by 25 basis points yesterday, and so I think that'll continue to be bullish for markets as interest expenses come down for companies, profit margins increase. So there's more room to move.
Read anything yesterday about this? What did they signal for up ahead? Give you the rate cuts today.
Well, the market was pricing in more cuts this year, but when the Fed spoke yesterday, they didn't sort of confirm that signal. They said they didn't guarantee it, and that's why the market sold off a little bit. They were unhappy with that news because the market was pricing in more cuts, and that would drove the gain for the markets.
Any other questions for Frank on that first report? Not.
We can jump into the investment recommendation for today on slide 16. So we're recommending venture capital investment today with Andreessen Horowitz. They're an existing manager on a roster. We started the relationship just a couple of years ago. And they, one of the strengths is they're really focused on AI, and through this structure, which is called the multiplexer that we're in. We're investing across their platform. They're set up across different industry verticals, and so it'll include investments in two different AI funds, what we call American Dynamism. I think the best example for American Dynamism is think about SpaceX, aerospace and defense, for the benefit of America. And they have a late stage venture fund, a biohealth fund, and a video gaming fund that will all, our capital will all be deployed into over the next few years. So I'll hand it over to Kirby Francis from RVK, and he can in a little bit more and then introduce Jen from Indecent. Kirby, are you on?
I sure am. Thanks, Frank, and Governor, members of the board. Thank you so much for having me this morning. It's nice to be with you again. We think this is a great opportunity to continue a partnership with one of the strongest firms in venture capital here. And I think there's a few reasons why it makes sense to continue with this. One, Andreessen Horowitz is built differently than the average venture firm. So rather than being a small number of senior investment professionals, they have a very outsized value creation team. So as private markets have become a place where companies grow and incubate longer before they go to public markets, we think that value creation team is a big advantage, helping startups scale not just to 10 million or 100 million in revenue, but into the 100 millions of revenue. Andreessen has built that team out over the last decade, and we think that helps them get into the very best companies, which are very competitive because of their obvious quality when they're seeking fundraising. Two, this is a great administrative way to access the main verticals and themes in venture capital currently through a single commitment. So because of Andreessen's large platform, you're going to get a lot of AI exposure. As Frank mentioned, you'll also get American Dynamism, which provides this more physical companies based in the physical world, and then a few other strategies like like biohealth and like games that are going to supplement those returns. And then lastly, we think that there's still an incredible opportunity in venture capital. We have, of course, are watching AI transform both the way that we work and the way that information is processed in our economy. And we're in the very early innings of that. This investment would continue the relationship with Andreessen and continue to put capital behind that. For all those reasons, we think it makes sense to go forward here. The firm has grown over time from this a single strategy to the diversified portfolio of strategies that you'd be investing in here. But again, we think there are advantages to that, and it has a great role to play in the portfolio. So I'm happy to answer questions on RVK's due diligence here or the fund or venture capital at large. Otherwise, I'll pass it over to Andreessen. Great.
Questions for Kirby? Yeah, we'll hand it over to Jen Call with Andreessen Horowitz.
Excellent. Good morning, all. Thank you so much for that kind introduction, both Frank and Kirby, and good morning, Governor Armstrong, and good morning to the entire team. I see many familiar faces from approximately two-ish years ago when we had the good fortune of presenting, and appreciate the opportunity to reintroduce the firm today and hopefully dive a little bit more into some of our strategies as well. Frank, should I take over share screen here, or what's the best way to
No, we'll direct them to jump to slide 25.
Okay, excellent. All right. So who is A16Z? So both Frank and Kirby gave a nice introduction here, so I won't belabor the point. But just by way of context, the firm was founded in 2009 with the ambition to be the venture capital firm that founders wish they had access to. And Mark and Ben, having been former customers of venture capital, Mark Andreessen, of course, of Netscape fame, he and Ben met at Netscape, and then subsequently they started a company called LoudCloud Opsware, which subsequently sold to HP for $1.6 billion. They reflected back on their experience having been customers of venture capital and said, gosh, venture capital is great as a function of funding, but there are so many ways of which a venture capital firm can be almost a bridge loan to credibility for early stage startups. And specifically, if you look at our firm today, we're about 600 people. So we're the largest venture capital firm in the world by both headcount as well as by AUM. And the thesis is, if we can roll out the red carpet for your early stage startup, we can give them access to our network. So that's access to Fortune 500, Global 2000 companies in form of customers. That's access in form of talent. So on the executive level side, as well as the technical talent side, access to marketing, media, government, access to folks on an international scale at a sovereign level. If we can plug them into the matrix, if you will, that will not only help to accelerate the development of their businesses, but obviously at the end of the day, help accelerate returns for our limited partners as well. And so if you scroll down to the next page here, here are some of our focus areas. So we spend time all the way from seed all the way up through to growth, and we are bifurcated by these different areas, and the multiplexer has the benefit of exposure to all of these verticals and stages that you see here on the page. And so particularly American Dynamism is an area I know we've been collaborating quite a bit at the state and local level on, just given there's so much opportunity, quite frankly, to not only bring technology to these traditionally very physical, hard industries, but also find ways to accelerate that. And I'm oftentimes reminded, particularly in North Dakota, with the benefit of a tremendous amount of rare earth minerals. Other areas of which we spend time, of course, on the AI infrastructure and AI application side. So all this is of course, related to this massive platform shift that we're seeing now happening with AI. And when I refer to infrastructure, it's all in the context of software. So software selling into developers. So not in the physical construct, but in the software construct. Applications, of course, that are built on top of that. Games, biohealth, crypto, and then late stage, which sits on top of all these 6 verticals. And the thesis behind the firm in terms of everything we do is the intersection between software and meeting these vertical industries. So, in the case of biohealth, for example, it's using, for example, AI and machine learning techniques in the context of not only hopefully accelerating drug discovery, for example, but also on the healthcare side, improving the way that we actually not only as patients access healthcare, but pay for healthcare, hopefully improve healthcare outcomes, and using that technology to hopefully make it a much better and more seamless experience. If you scroll to the next slide, and please, by the way, interrupt if there's any questions along the way, of course. This is a slide that just reflects the senior general partner leadership across these investing areas. And if you notice on the page, there's a slight color coding to each one of these faces you see here that actually maps into the vertical areas that you see on the page prior. So Kirby had alluded to, we have grown the firm quite a bit over the last 16 years, but we oftentimes think of ourselves as a decentralized firm. And so what I mean by that is each one of the boxes on the prior page is reflective of not only a dedicated fund, but also a dedicated team associated with that fund, as well as an operating team. And so within each core kind of vertical area, we have the benefit of pushing decisions down to a very core investing team that oftentimes is no bigger than 4 to 6 individuals. And that's quite a surprise compared to the fact that we are 600 plus people, but it's an important distinction in part because we think at the earliest stages of investing, and investing, quite frankly, in general, it can't be all 33, for example, people in a committee, just because that conversation oftentimes gets diluted, either by the fact that not everyone is maybe up to speed on the topic, and also, quite frankly, with a group that large, it becomes either quite diluted in terms of the conversation topic, political, and so we want to make sure we retain that decision making down to the atomic level so that that level of rigor of discussion shines through as a part of that. Each one of the teams, as I alluded to, also has a dedicated operating function. So, what I briefly alluded to at the outset related to marketing and talent and go-to-market, there are dedicated subject matter experts across areas of those verticals that know that market intimately well, and therefore are working with our founders as a part of that as well. If you scroll to the next page here, I will breeze past some of these as well. If you can scroll to the next one. We alluded to our operating network, and the next slide, actually, slide 30, helps to illustrate how tailored and focused these operating capabilities are as a part of that. And so one of the big questions we oftentimes get from our founders when they are contemplating working with us is, gosh, there's a lot of capabilities here. I'm plugging into this army of resources. Does it cost me anything? The ability to help my company accelerate and get connected to these customers, get connected to these talent networks, this seems like an amazing perk. Do I have to pay for any of this? Because, traditionally, at least in either other asset classes, for example, like private equity, there's either some consulting fee or chargeback associated with that. This entire operation is paid for by Andreessen Horowitz through our management fees, which of course we get the benefit from through our limited partners. But the reason why we built the firm in this way is that we wanted to have the benefit of those management fees to invest into the resources and capabilities of the firm, and therefore create this competitive advantage in terms of winning not only the best deals, but winning the hearts and minds of founders, and then moreover, helping drive the outcome of our companies. And then also secondarily, it then aligns us very, very immensely with our limited partners, meaning our upside, our carry is aligned with are generating returns for our limited partners as well. And so that alignment with our LPs, as well as alignment with founders, is a fundamental core way of how we think about doing business, and hopefully reflected in how we have built out the firm over the last 16 years as well. So let me pause there and see if there are any questions either about the firm, and we can obviously dive further into some of the strategies as well, if that's helpful.
Just a small little upstart firm.
We do think of ourselves as still startups. I know 16 years in, maybe you can't claim that anymore, but a big component of how we think about our business is we are constantly disrupting ourselves. And the great thing about technology is you have to disrupt yourselves. When new technological breakthroughs, for example, like AI happen, or like crypto happen, or games, biohealth, et cetera. And so by decentralizing the firm into these core different areas, it allows us to be way more flexible than maybe a centrally run organization might be.
There's several video games I would like a sequel to, so if you could invest, that would be fantastic.
Well, games is such an interesting category, in part because AI is also completely upending the cost structure of content generation. So I'll give it an example if you could indulge me. So it used to take, for every one software engineer you have to develop a game, it would take probably 4 to 5 artists to also create content for that game as well. And with the new kind of generative art content tools, that actually merges just into one person.
That's the balance.
Jen, thanks for coming presenting today. Obviously a big portion of this fund is in AI. Can you give Andreessen Horowitz's thoughts on some of the commentary out there about, starting to be overbuilt, or the bubble developing in AI? I mean, what are your guys' thoughts on that?
Yeah, that is a great question, especially, you may have seen the news yesterday on NVIDIA hitting $5 trillion in market cap, which is more than most countries' GDP, with exception, of course, US and China, which is unbelievable in some respects. And obviously, it's great that it's also an American company, so it's also very, very positive. On the flip side, there is a lot of concern around the fact, are we, in a bubble? And is some of this activity reflective of exuberance that is overheated? And there's a lot of comparisons to the dot-com era, of course, from the build-out standpoint, just because it harkens a lot of similarities to what happened with the telecom build out, of course. I don't want to draw too much comparisons to the dot-com era, in large part also because, the telecom build out had a lot of leverage, unfortunately, that accelerated things as well. In the context of the build out that's happening with AI, I would bifurcate from where we are spending time. So we are largely spending our time on the software side. We think of that world as the foundational layer of where AI is being built, and then the applications being built on top of that. In order for that to actually flourish, we need the other parts of the infrastructure stack to come into play. So whether that be data centers or whether that be in the context of actually being able to provide the compute. And this is the first time we're actually seeing a direct correlation of dollars into an investment that then drastically decreased the cost of intelligence. And so, as a firm, we are extremely excited by the reality that this opportunity set is probably the biggest we've ever seen as a firm, because we're almost reinventing computing in some respects. On the same token, we have to be extremely thoughtful around how we think about the addressable size of the market and also the downstream implications in terms of valuation and entry point. And so, during this time, we try to bias to early stage, getting it at, oftentimes a seed stage, and thereabouts, in part because that gives us the maximum level of ownership and also that's purview, but also at the same time, being sensitive around the fact that once these companies actually take off in terms of progress, the valuations get extremely expensive very quickly. And at those later stages, it probably doesn't make quite as much sense for us to invest. And so we're conscious of that reality as investors. We want to bias to as early stage as possible. And then at the later stages where we have a unique advantage to come in is oftentimes we are either prior investors, so have a very strong sense of where these companies are performing, and also, have the ability to really assess the traction of these businesses. So I'll give an example. A company called Cursor is on track to do 500 million has already done 500 million in revenue in less than 2 years, on track to likely do a multiple of that by year end. And by extension of that, this is a company that, for all intents and purposes, is a product for developers that is operating in a space where it's doing more revenue than the entire space alone. And so what does that mean in terms of worries around valuation? This is a company that for the first time is giving so much capability to developers and being able to allow them to be better developers that they are extremely not only excited about the product, but it's almost become a daily part of their workflow. And so they're willing to pay for that as an outcome because it's given them so much productivity as a part of that. And so we're seeing hundreds of examples like this in similar ways that I'm happy to share more about. But when you see that level of traction, it's hard to deny how exciting it is, A, just as practitioners in the space, but also B, why we shouldn't be very excited to invest, again, at the earliest stages and continue to capture value share at the later stages when it's appropriate to do so.
Do you have any suggestions for us as a board of available commentary, thoughtful pieces, things to help us gain context and even assessing this space? It just seems most things that I read, it seems like it's the Wall Street Journal or something. I'm not sure if it's any good at all. Frankly, it's interesting. It's all intriguing but these are new areas for us to be assessing with regard to the last couple of meetings. We've had a couple of different investment opportunities that we've explored and gone into, and we get good presentations, and that's super helpful, obviously. But do you have any ideas for us about materials to be consuming as a board with the responsibilities we?
Yeah, we would love to follow up on that offline. We are incredibly prolific content creators from both from a blog post perspective, videos, podcasts, and so we'd love to follow up and send a package over if that's okay with you. In part because for better or for worse, I do think the mainstream media has over-indexed on headlines, and so oftentimes a level of depth on some of these topics are leave a lot to be desired and also probably scratch the surface on what is reality and what we're seeing on the ground.
Yeah, that would be, I'd find that helpful. It'd be useful to start, building that context. And yeah, most of the articles are just like, somebody saying it's gonna wipe out all these jobs. Someone else giving historical examples about every time we say that, it actually creates jobs, whatever the technology is. And that's, fascinating, but not exactly what I'm contemplating. So yeah, I value that. I'd love to see it.
For sure. Yeah, on that topic, is I know it's important, just to think about for all of us, quite frankly, in the context of what this all means in terms of, society and implications for, whether it be our kids, our own jobs, for example. An example I often reference is the kind of godfather of AI, for example, had predicted, Jeffrey Hinton had predicted that, with radiologists, with AI, radiologist jobs would actually go down. And turns out radiologists, the demand for them has only gone up because once there has been more availability of technology in getting MRIs, what happens? More people can now get MRIs. And so all of a sudden, the number of people getting MRIs, and you might have seen these advertisements for people to do it, with private pay, for example, as just a preventative measure, has just exploded. And so I think the lesson to at least observe from that is oftentimes when you, for example, build highways, what happens? There's just more traffic that ensues. And so the outcome oftentimes of making technology more prolifically available and accessible oftentimes has second order effects of just driving more demand as an outcome of it. So as a part of that, very happy to send some of these materials in part because we are probably on the more optimistic side of the use of technology, and it's always good to get the counterbalance of what you're probably seeing or consuming in the media.
Yeah, Jen, I know you guys have a lot of great articles and podcasts. If you send maybe a couple favorites or standouts to me, I can get them to the board.
They've got a very deep YouTube library too of stuff that they've put up. And Mark Andreessen's on podcasts, like long form 2-hour interview ones all the time.
That is very true. Awesome. All right. Well,
Treasurer Beadle.
we appreciate the partnership and look forward to continuing it.
Thanks.
Or Frank.
Yeah, I guess I know Treasurer Beadle usually starts with the motion. And this recommendation is for 75 million to the multiplexer 2.
Yeah, I would move approval of the $75 million commitment to the Andreessen Horowitz Multiplexer Fund 2C, subject to standard legal review and documentation.
Second.
Discussion.
I think it's a solid firm on a good trajectory. I was very comfortable when we made the initial investment, and nothing's changed for my comfort level in making this investment.
Roll call.
Secretary Howell?
Yes.
Superintendent Baszler?
Yes.
Treasurer Beadle?
Yes.
Attorney General Wrigley?
Yes.
Governor Armstrong?
Yes.
Thank you.
Thank you, Frank and team and RVK and Jen. Thank you so much for your time and good presentations.
Thanks, Jen. Thanks, Kirby.
Awesome. Thank you so much.
Let's talk
Thanks,
coal
all.
reclamation.
All right. Take care.
Yeah, so we have a brief presentation on coal mine reclamation trust, and then I see our friends from the geological survey are here for our critical minerals. So you'll be up next in a few minutes after we have this brief presentation here. So we have our general counsel, James Wald, who's going to talk about a coal mine reclamation trust.
Speaking of artificial intelligence and energy, coal. So we'll give a little bit of background on coal mine reclamation, what's required. And we're going to talk about specifically about performance bonds and what was decided by the Legislative Assembly in 2021 and allowing coal companies to how to handle reclamation. And then we're going to kind of talk about next steps. So in 2021, the legislature was looking for, and coal companies were looking for a different option in how to give the state assurances that they're going to perform on the reclamation requirements under statute. The reclamation requirements largely governed by the PSC through primacy that was granted for Surface Mining Control and Reclamation Act, better known as SMACRA. And under statute, the PSC is charged with accepting these assurances from coal mining companies when they want to go out and provide mining operations and disturbances to the land. And what's required is that they provide an assurance through usually historically one of three ways. Actually, it's going to be four. They could provide a surety bond, which is essentially an insurance policy that they're going to carry out their reclamation requirements. They can have a self bond, which basically relies on their own balance sheets and financial strength as a company. And then the third is a collateral bond. Usually that's put up in cash or securities or other collateral. And in 2021, the coal companies wanted a way to add some of their assets as collateral instead of cash, and that would allow them to use that cash for other operations and focus on the mining operations. So what the legislature proposed in 2021 was adding the ability for the coal mining companies to put up the assets that they have, which might be, it was talked about using heavy equipment maybe, or most likely land that they own as collateral for reclamation. What they directed was, in order to accept that collateral, that Board of University and School Land set up a trust. Working with the PSC to take those assets that the coal mining companies would use to ensure their reclamation and keep custody of them until those reclamation requirements were complete. And once the reclamation was approved and signed off on, that collateral would be given back to the coal mining companies. However, if they defaulted, the PSC and the board can then go ahead and use those assets to help pay for the reclamation on those disturbed areas. What we're looking at now is establishing that trust and standing it up and allowing it to accept those assets once approved by the PSC. So what we'd recommend, I guess I'll stop there.
Yeah, we're just
Questions.
establishing what the law requires us to establish now that there's a need for it.
Precisely.
We're not,
Who proposed this legislation? Do you recall?
I think it was started with coal companies, and then it like I said, it was kind of in a time in 2021 when there was a lot of stress on the industry. They were looking for ways, if something went south, how can we keep the cash that we have, and instead put up these other assets that we have for the reclamation requirements.
Interesting.
So that came out, and they have some land. I think the idea and intent in the immediate term is to maybe use real property. Say, we would like to put this up. If we default, you can take title to our real property and dispose of that in order to pay for the reclamation on lands. And then, the board, where the board comes in is to administer the trust and then invest if the investable assets in that trust, the way that they invest in the other trusts. And if there's anything left over after the reclamation requirements are fulfilled, that gets deposited into the Common Schools Trust Fund.
So the legislation was in 2021. Why now in 2022?
Well, in 2022, PSC had to submit proposed rules to the
because government is slow.
federal government.
No, I mean,
That it was just the process that took this long for the.
It is, and last we heard from the PSC, those rules haven't been officially approved yet, but they have to submit the rules to the Office of Surface Mining, Reclamation, and Enforcement for approval. Since the state has primacy, they have to run it through the federal government to make sure that those rules are at least as strict as the federal rules.
That would.
Yeah, we were just contacted by PSC, I don't know, 2 or 3 months ago saying, okay, we're almost ready for this now, so you should probably start getting your stuff ready.
Okay, that makes sense. I didn't know we needed to go
Yeah.
through. And go through those processes, but like when we have to do admin rules. Down or down 6 to 9 months. So that makes sense.
Yeah.
Okay.
So when you got the state side and you also have the federal government, agencies to kind of run that full circle.
Yeah.
Here we are, we're about ready to do it. So I guess the recommendation would be to allow, to authorize a commissioner to establish and administer the trust and then work with the PSC on the processes of what that would look like to accept the assets.
Well, I would move that the board authorize the commissioner to establish and administer the coal mine reclamation trust pursuant to North Dakota Century Code, Chapter 15-72, and in consultation with the PSC, develop a memorandum of understanding for receiving, managing, and disposing of assets.
Second. Discussion. Roll call.
Secretary Howe,
Yes.
Superintendent Beza,
Yes.
Treasurer Beetle,
Yes.
Attorney General Wrigley,
Yes.
Governor Armstrong.
Yes.
Thank you.
Great, thank you, James.
Critical minerals.
All right. Yeah, we'll move on to item 5B. As the board recalls, we had the North Dakota Geological Survey give a presentation to staff about their studies that they've been doing throughout the state, especially on state trust lands. We found it very interesting. I had mentioned to the board a few months back that we'd probably ask them to come to present to the board. So here they are. We're gracious that they were able to come and take their time and do this. And thank you guys. So Ed Murphy, the state geologist, which most of you probably know. And then we have Levi Moxness from the Geological Survey as well. So thank you, gentlemen.
Okay, thanks, Wayne, but I'll just be going over a little bit of context. How we're doing the study, and then we'll general the last 10 years, try to get into a little bit about what we just found on trust lands and some drilling we've done last year or so. So the project kind of comes about based on our responsibilities outlined in the Century Code, of course, to really lay down the framework for our industry to come in behind, especially with a brand new potential resource play like rare earths and lignite. So we're putting in place the geologic framework for the core industry, and then of course with special interest was the resources that the state owns, some surface lands and both mineral acreage. Well, on page 43 here, it's just kind of a timeline of how we got here. The United States used to lead the world in rare earth production through the 80s, and that was mostly from Mountain Pass Mine in California. But China, through the last few decades, in a combination of foresight and essentially controlled economy and some great geology, they really developed a monopoly on rare earths. And they have 90% of production as of years ago, and more importantly, probably all of the refining and processing facilities that are so important. So 2010, they used that leverage for the first time in their monopoly, and they cut off Japan potentially briefly, and that was very effective. Japan's economy they produce a lot of electronics and pretty much all modern electronic technology.
Japan seized a Chinese boat in the Pacific and held their captain.
Yes.
That's what happened. Japan seized a Chinese boat and held their captain. China cut off Japan's supply of rare earth minerals and critical minerals. They returned the captain in like 21 days.
So very
Legitimately, they're like, we got no options.
So the rest of the world kind of takes notice of that. Like, this is a very effective leverage that China has if things ever go south in international relations. So around that same time, there's some publications that coal actually might have some economic concentrations to rare earths. Usually these things are mined in hard rock mountain deposits like Mountain Pass Mine in California, where the U.S. used to get most of their rare earths. And so just a couple years after that, right before I got here, Ed team proposed to the legislature first study and sort of assess what we might have here in North Dakota for rare earths. And so people nowadays use rare earths, critical minerals, sort of interchangeably, but rare earths are 16 elements as part of a broader 50 commodity list that the USDOI put out during the first Trump administration, where there started to be some trade tensions. Oh, yeah, 44 and page 44. So on the right is a chart actually that just put out about a month ago from the DOI. It just shows a potential decrease to US GDP if any of these 50 minerals the supply is disrupted. Many of the elements we're talking about, rare earths, gallium, germanium are on the top right corner. So talking in the billions in decrease to US GDP when these supplies get disrupted. So it's not just rare earths, there's a few more elements. So we add that to our assays when we look at the geochemistry of these coals since 2018. And skipping ahead a few years, promising results, a lot of basins, but lignite specifically, and the US Department of Energy in 2023 wanted to build first of its kind, no one's ever done this, extraction facility in this selection, West Virginia and North Dakota, as semifinalists for that grant. It went unfilled because no one could supply the tonnages that the US DOE wants. So at existing mines, just a little bit of enrichment in the upper couple of inches. But
Yeah, it's top 10% of the vein.
right. So the mines don't mine enough of the top couple inches to produce the tonnages that the DOE wants to produce to fix this strategic vulnerability for the country. So it went unfilled. And meanwhile, in December, China cut off the US from gallium and germanium. Those are important. They're not rare earths. They're critical minerals. They go into semiconductors. So the AI chips, sort of a back and forth with that. And then briefly in June, I believe, rare earths were cut off as well, and drove negotiation for that truce that came in June for a temporary activist delivers and some AI chips to China in June. So, and I know Trump and Xi just met. We'll see what the details are on that. But either way, the federal government is very serious about US mines somewhere. Real quick on page 45, what the elements we're talking about. These are critical minerals that are highlighted as elements. But what we're looking at in coal, we think the selling point for coal is the heavy rare earths, which the US has none of. You have Mountain Pass mine, it only produces light rare earths out in California, those light blue elements. But the dark blue elements are really important in electric motors. Again, any sort of high technology is probably using this. Scandium, important for aerospace. That's SC up in the top left. It's an alloy with aluminum. They get F-35s and everything stronger, lighter. And I mentioned earlier, gallium and germanium, GH. Big chips. So where we looked, page 46, when we started in 2015, we had what was published, 200 samples, and that's to characterize 1.3 trillion tons of estimated lignite in North Dakota. So only 200 samples to do that is what we had to work with when we started. And we think of coal country today as just those counties right north of Bismarck. But if you look at the Public Service Commission database of abandoned mines across western North Dakota, there's lignite near the surface or the western half of the state. So that's all those black X's on page 46.
Some of those mines up in Burke County I'm familiar with are that are abandoned. They were never reclaimed. There's all sorts of, waterways and these mounds. Does that facilitate the assessment in some
We
odd twist of fate?
A lot of times the head walls are collapsed, so it's hard to actually get in there and take a sample from the outcrop. But it is pretty interesting.
I'm going deer hunting in a few weeks if it even gets this up. Ed never lets me do any excavations on the Industrial Commission report. So if I'll just go out there and bring back some dirt for you guys.
Yeah, we talk all the time. Like, I wonder, some of these old mines, how much reverse they really had, and some of these it seems.
And there's miles of open pits there.
We started reclamation in 77, I believe.
Yeah.
It was in high school in 75, and MDU had they were up at the Custer mine, which is the Boy Scouts got in there and planted trees all over those spoils. And then they had a bulldozer knocking some over, saying the state's going to force us to reclaim all these. So I remember that. I thought, well, that's interesting.
Yeah, these mines are from the 30s and 40s, and then there was a little coal-fired electric generating plant out there, really small. And
Larson up in that area.
Yep. Interesting.
So there's a lot more lignite in the state than just what we have at the mine. So a lot of the work we've done is to sort of assess what the rare earth concentrations are, and way out west too. So During outcrop sampling, which is just take out into the Badlands with a backpack and take a sample of lignites that are exposed on the surface. We've been doing that for 10 years now. A lot of that with here there's outcrops. So national grasslands, basically the number of samples, we're at over 1,800 since 2015. And about 540 of those have been like state across surface. Some of our best in the section.
In advance, Caitlin.
Oh, yes, yeah, I'll follow those pages. Yeah, 47 showing out of 1,800 samples, 540 or so from trustland surface. We worked with private landowners, BLM, and rats and forest service as well. So page 48 shows where those samples are from, and again, we've kind of been limited to where coals are exposed on the surface. And in the center of the basin, the coal-bearing strata in North Dakota is like 2,000 feet thick. So over the years, we've measured 332 measure sections, trying to catch all those coals through time and to see if there's any that have higher concentrations than others. Page 49 shows the results as we've been sampling over the years. The U.S. Department of Energy thinks 300 ppm, so 300 parts per million rare earths, is potentially economic in coal seam. It's a very generalized threshold, but I've highlighted all.
You don't have to invest the money to make it economic. Well, they will invest some money to make it.
Yeah, so we have a lot more context on that number as people have worked on the extraction side. But from the get-go, they were saying 300 ppm. So let's find that. So this chart shows that. So you can see right away in 2015, everything in green is over 300 ppm. We started to find enriched seams. We didn't really have a great explanation for why they were enriched to that degree. And we did a lot of lateral sampling, focused in on those seams that we initially identified. And we think we finally started to put it together in 2022, 2023, and started to find some coals that were approaching 50 times the enrichment of normal West coal. So page 50 shows one of these horizons. There's two horizons we've identified that are associated with extremely enriched coal seams where they're present. And this is the upper one, the Bear Den member of the basal Golden Valley Formation. What it is fossil soil. It's heavily weathered, ionized claystone, and it was very acidic when it was at the surface, and it had a normal low concentrations of rare earths in that white and orange zone, and as it leached to weather, the rare earths descended, and lignites below caught the rare earths, much like a carbon filter would do for your drinking water, a charcoal filter. So the organics in the lignite trap the rare earths, and that lignite is something that other types of coal. Lignite has oxygen still. It's a low rank of coal, so these other basins with more pure ranks of coal haven't been seeing this. So we have an advantage by having lignite in North Dakota. There's a second one of these same white seams on page 51. It's the rainbow. It very similar to 20-30 feet of just white galvanic clay, and 1,000 feet or so stratigraphically below.
Did you want to point me out for scale?
Yeah, I better. It's still sampling. It's just a couple years ago. Something on the point in the South Crop during the section here.
It's going to be interesting if they locate these rare earths in sufficient concentrations that it's economic to go in there and do it. It's going to be interesting because try to reclaim that after you suck that out of there.
Yeah.
It is going to be interesting. And it's going to be, if you find it in there, I imagine it's going to be all throughout the area. So you can go through and I feel like we spent 8 years in the Bakken complaining that we had, two little wellheads out in the middle of wheat fields that weren't even as big as grain bins. And I still laugh. I just take pictures. And put it out on social media all the time. Because I'm like, look at this. I mean, the impact of this is so much less than people were acting like it was going to look like northern New Jersey out there or something. And this is a bigger challenge. So,
well, the reason that we've been in the Badlands, that we started there with outcrops. That's where all the outcrops are. So it's easy to move around.
Right.
And then on our drilling program, we moved out of that where there's a black outcrop. So now you eventually mining surface mining. They're on a relatively flat surface. It's easier to reclaim and it's not such a beautiful setting as these.
I see.
We did do a small case study of that in a couple of slides, but page 52 just shows that as we've gone, we've released the technical reports of investigation and documented first evidence of rare earth enrichment in North Dakota lignites in 2017. More publications trying to characterize the stratigraphic and then the lateral variability in the seams, and then putting it together, published 2 reports in 2023 that sort of brought it all together as a comprehensive exploration model. And then look at the last few slides, putting that to work and as a proof of concept, the drilling that we've done in the last 2 years that use that exploration model to show that it works. Before I get into that, page 53 shows along the way we've been working with University of North Dakota, College of Engineering and Mines Research Institute. It's really been on the forefront working on the extraction technology. So if we ever do mine this, you get it out, what's the best way to do it, which acids, you have to put a lot of acids into it. And the DOE has thought their results were really promising. You don't have to spend twice as much acid as the rare earths are worth, like many of these other ores that people are looking at right now. It really is very easily extracted from rare earths. You almost just wash it out. So working with State Westlands,
UND involved.
in 2020, in January, which impact, we incubated a bulk sample of 44 tons and get it shipped up so they can work on a DOE grant. And in total, between UND, the Research Institute, the College of Engineering Mines, and EERC up there, they pulled in at least $35 million in federal DOE grants working on the extraction side of it. So DOE is very interesting.
Going to mention we're in mining, we were lucky because you can see the 2 skid steers. We were lucky we had Levi and another 2 farm kids on our staff that knew how to operate skid steers, but they both grew up on the pedal ones. We had one was a joystick, so the one operating the joystick had a little bit of difficulty.
Having John Anderson there too. Well, I see rancher nearby to bring his loader tractor there to help with those 1-ton bags of coal that we got out there. But this is all reclaimed. We were just there this summer again and hard to tell that we spent a week out there taking 44 tons of coal. So
Can you imagine how insecure South Dakota is going to feel if this takes off? They're going to be like, seriously, they have the Bakken and now they've got rare earths up there. And they've just got the lie that they've got more pheasants. It's not true.
Yeah.
I mean, people believe it.
And the faces.
Yeah, they stand the face.
They do.
I was just there. They have 1/3 of the pheasants.
Good football team up here.
Ultra critical minerals for pheasants.
That's a big deal.
That's a big deal.
That's basically worth some money.
There's the headline for you guys. Bartering.
So what we were just talking about, page 54, we wanted to take this from this outcrops because we're limited to those. Yeah, a lignite has to be exposed to the surface. You can't sample it, but we think we know where these seams are. We can just do some shallow drilling and for us. So we were awarded $500,000 from the 68th Legislative Assembly to implement a drilling program in the previous biennium. This was again a proof of concept for industry that you can predict and intercept enriched lignites in these 2 seams below these white clays. And then really
Where's the core sample library going to be for that? Where are you going to keep all that?
we've got them all in a warehouse here in town for now.
Yeah.
But eventually they'll go to Grand Forks.
Okay.
Yeah, we're in Levi's office still.
Yeah. I'd like to come out of my office. So.
Huh.
Again, to bring this model out of the Badlands into these west central counties that these horizons should be present in, and do some more characterization there. And to find thicker lignites. We've found plenty of 1 foot, 2 foot enriched lignites, but conventional mining thicknesses, 3, 4, 5 footer. You're ever going to seriously go after one of these seams. So hopefully to find thicker enriched lignites. Page 55 has a map of where we drilled these holes. This was 53 holes, September, Upland, October last year. We did 26 of them on state trust surface, 24 on private surface with trust lands minerals. So we came into agreement with the private landowner. And we really focused on the Bearden at first, with most of these holes going in Mercer, Dunn, and Stark counties, the black dots here. So the Bearden upper members in orange on the map, and rain bed is in brown on the map, and limited to just where it should be within 150 feet of the surface. Some conventional depths that you know surface mine on lignite, but the rain bed theoretically is under most of the basin. This is just where it's shallow. We ended up coring at 28 sites. 22 of those cores contained some enrichment, so we thought that was pretty good results. Ended up getting close to 900 total feet drilling, usually staying within, again, 150 feet of the surface. We recovered 940 feet of core, reclaiming all those holes, plugging them, actually, and raking them out. Very minimal surface disturbance, basically.
How did you decide the sites?
So we did look at existing logs and where there might be coals, and then we have models, and this is what's shown on the map on page 55, is where's there trust land, surface or minerals in, where that horizon would be at a reasonable depth. So we don't have to go 300, 400 feet and spend most of our money drilling. And if there was existing water well logs that said there's lignite down there and about the right depths to require systems.
And we were used to, we know where crossline surface is. We're used to that. We were surprised when we pulled the mineral maps. As you know, a lot more mineral acres out there.
We also wanted to do it close to the existing mines. So you can see a lot of it up in Mercer and eastern Dunn County. Just in this case where there is a processing facility at an existing mine, potentially, a nearby mine, short transport distances if we were to find something.
Is it conceivable that you could, I don't know how vast the opening would need to be, but that you could go down and then do vertical drilling, mining capacities going out into seams and then pulling it out? Is that at all conceivable? I mean, you have a conveyor system of some kind. It's not a liquid, but
we looked at called in situ, turn fluid down to like water.
Doing it with lithium, or they're at least starting the test process with lithium in Utah.
Is that right?
Old oil and gas wells that were drilled in were dry holes, and they have the core samples all the way down, and they have really high in some places.
Be something.
But again, it's the same. I mean, we talked about the Slope County leases. It's not a matter of knowing it's there. It's figuring out what the economic process is for me.
Right.
That's why people like the top seam of lignite, in that if you can figure out if there's enough of it viable, and the process of getting it out, like the actual process of getting it out of the seam, the actual access to the critical minerals is pretty simple.
Yeah.
We've been doing that for a long time in North Dakota.
That's figured out.
A little different than if it's 3/4 of a mile down in the hole.
That's what I'm saying. It's interesting.
Page 56 shows the variety of geologic settings we found in these drill holes. Again, we're looking for C is really what we're looking for, and we were able to find it in a few holes where you have a thick, rich lignite right below that source beds, which are those white and orange clays you saw in the pictures. So finding that underground, oftentimes there's a thin lignite and it's very enriched. And if it's a foot thick or a few inches thick, what are you going to do with it? Oftentimes that zone is replaced with a sandstone, which don't accumulate critical minerals, or a glacier has scooped down a little extra deep. Sometimes that peeling salt isn't very well developed, but we have several examples now of a thicker enriched coal in the perfect position, and that's what I pulled out as an example on page 57. This is a core from last year up in Mercer County that is about 5 feet thick between the lignite itself and some enriched brown carbonaceous clay below it. and it averages 716 parts per million. So again, how much weight to put on that 300 ppm number, but it's double what the DOE, more than double what the DOE initially has proposed, was promising. And of course, the question is, we only did one core from this last year in this area, but how laterally extensive is this? Does lignite pinch out? Rare earth concentrations consistent enough laterally you could do a small mine? We did get a little bit of evidence about that type of situation from Adams County on page 58, where we found an enriched coal, actually two of them, about 10 feet apart, both a few feet thick. So we drilled another hole half a mile away, similar lignite thicknesses, similar overall rare earth enrichment. So we think this is a great, isolated piece of evidence that you do get consistent enrichment in lignite thicknesses, in at least under the rain bed, or for the distance of half a mile. So that was promising, and published those results. Page 59 here, just an example. All the technical details are available in this investigation and the 137 that we published this July. And based on those promising results, page 60 now, we were awarded another $400,000 in this previous legislative session to do phase 2 of this, which is really to go back and expand on those initial promising sites. Both of those were on state trust surface lands. Do a little bit of lateral drilling, get more information about how consistent seams are and how consistent enrichment is, and then to do new drilling in some of these counties that we weren't able to get to last year.
Is that $400,000 enough? I mean, is that what you guys are asking for?
Its analysis is really expensive. So we analyzed over 300 samples of sections of core. And so that was about half that budget, $500,000. But 53 holes, that was about right. Ours has definitely went up over the last year or so for a lot of things. So, I think it'll be about right.
With the portable X-ray fluorescence that we got through the legislature for 45,000. For that last program, Levi took over 5,000 readings. So that gave us analysis that would have been 5,000 times $280 or so for analysis. So we're hoping that we can shave some of that off.
Yeah, less money towards analysis, maybe more towards the mileage for our drillers and loggers to get maybe down into Slope and Bowman counties next year. Yeah, so we just finished that last month. We did the first half of this biennium's drilling on page 61. All of it this year was on trust line surface. Spent most of this time in Oliver, Morton, and Grant counties, the purple dots in the map here. We covered from 16 sites, end up drilling a little bit deeper, a lot of these just to try and get an understanding of where the formation contexts were. Stratigraphic. And then recovered 450 feet of core. And we're checking all those sites, making sure we're got everything reclaimed and in order. So we'll be looking through the results of that over the winter, but we think we've got a couple more promising holes.
How does the process you're describing for us here today, how does that differ from where they're at in Wyoming? With regard to what they started out months ago?
Well, it's interesting. That's a private company. It's a big thing. And then my understanding was they bought that coal mine, and then they were trying to sell it as a new coal mine, and then rare earths came up. I go, and it's not rare earths.
Yeah.
The numbers I've seen from that mine, they would have to do it on an ash basis. So when everyone started thinking, oh, coal has rare earths, maybe the numbers aren't that high, but you burn it down, rare earths stay behind, and maybe you get 10 times more concentrated in the ash. And that's if not you process the ash. But everything we've been hearing so far is it's actually a step backwards, because that coal ash is full of aluminum silicate glasses that form at high temperature combustion, and it takes a ton of acid to get in that glass to free the rare earths to get out. So they haven't talked very much about how they're going to get the rare earths out of that coal. So they've done a lot of good work in Wyoming. They have higher rank coal. So it's bituminous, subbituminous. And I haven't seen much as far as, certainly not thousands of ppm. I haven't seen that coming out of Wyoming. So they're going to have to do it on an ash basis, I think. And so I'm very curious to see what their extraction techniques are going to be. UND as well, like, do you guys know with how they're planning to economically get it out of the ash? And they hadn't seen anything either, so maybe they're gonna figure it out on the fly.
There's a quite extensive legislative discussion on this last winter, going on in this building, and it had an air of just like, oh, well, see, maybe this will be of interest to them someday, maybe it won't be. And everything you're describing here, David, going through and figuring out at least some of the parties were looking around that curve, and they knew exactly what this was going to be. And
The real issue is going to be a new product and an old lease,
right,
which isn't their issue.
So say that again, it's gonna be,
A new product and an old lease.
Yeah.
But one of the biggest difference with Wyoming is we have lignite, they have whatever it is, sub-bit. I just call it sub-bit because I can't pronounce the second one.
But they got 50 feet of coal, they got thick coal.
Yeah.
But that's, they don't have the concentrations that we've got in these center ones, and so you can take that and even a mine coal here in North Dakota, take a 2.5, 3 foot bed, we've got more rare earths than in a 12-foot lignite. So
It seems like it's all controlled by extraction economics. Page 62 is just a summary there showing, people proposed you need 1,000 full ash. It's hard to extract. I don't even know if that's still, you maybe more, or maybe if you bring in gallium germanium, you can do it cheaper. But so UND thinks 300 ppm, you need 300 ppm. You get gallium germanium, you could do 150 ppm at existing lignite mines. Your mining costs are covered. And there, you're going to put in new mining infrastructure. You probably need more than 300 ppm. We have seams with 3,000 parts of the seam. So we're very curious on the extraction side as that scales, what is going to work, but we just want North Dakota to be the best characterized. This is what we have. This is where it is. So once the extraction side figures it out, once, the DOE decides, hey, we're going to go somewhere, who has something to work with? All right, North Dakota's done the most work. Let's do it. So we'll keep characterizing. We've got 25 more holes to drill next year. And just the final slide there on page 63, just these things are in the news every week. Both the Trump administration and even the previous administration were pretty serious about investing some big dollars towards this. So we think there's funding coming down the pipe and some decisions to be made at the federal level. But regardless of what I think Trump and Xi worked out overnight, they're going to move forward towards new critical mineral mining for many different commodities somewhere here in the U.S. moving forward. They're just trying to bridge the gap so we can scale it. And so, again, just a lot thanks to, of course, Ed here done a lot of sampling, started with Ned. Before I got here 8 years ago, Adam Chumley, who geologist for the last couple of years, and of course, the quick turnaround and a lot of permitting from state trust lands, from Joe Hanger, State Miller.
do you guys plan on, or have you given a presentation like this to the full legislature, the budget section, or is that coming down the road?
Yeah, we've given parts of that.
Not just like the Energy and Natural Resources Committee, but I mean, like, feel like you're rank and file member of the legislature who's not sitting on an energy committee. This is a big deal.
We did to both budget sections.
Yeah.
Full budget sections, we did
Great.
parts of that.
Awesome.
Thank you, guys.
Thank you, gentlemen. And yeah, it's a great partnership because, I think it's more efficient for you guys to be able to get one permit to study a bunch of different tracks or trust lands and having to go to each individual owner.
Yes.
So, yeah.
Yes.
Yeah.
Sums it up.
We're looking forward to seeing result, what you report out of your results next spring, maybe?
Yeah, we'll see if we do an intermediate report with the first 25 bulls. We do have another 25 next year and think we'll be able to this one, but we'll see what we find as we get the results back over the winter. So,
Okay. Thank you.
thank you.
Litigation update.
Yes. Last item on the agenda, real quick. Page 64 and 65, no update on the MHA versus United States Department of Interior case. We're still waiting for the judge to make her decision on the summary judgment motion that's been before her since April. And then at the bottom of page 64, the Leland case, we did appeal that, as I reported to the North Dakota Supreme Court, along with Department of Water Resources. We filed a joint appeal, and we actually did file our initial brief on Monday, October 27th. So then there'll be a series of, brief and then reply, and then I think. So the briefing will probably take 2 or 3 months. And then we requested an oral argument, so we'll probably get that scheduled sometime next year, I'm guessing. So, okay. But that is all I have on the formal agenda, unless there's other questions or things we need to talk about.
Do we have to go into exec?
No, we don't.
Okay. Anybody else?
No.
But that's all I have, Governor.
People on an airplane?
Yeah,
Looks like it.
I would say that it's just really quickly, and I think this is important for just some other pieces of this. That rare earth and critical mineral thing, the science part of this is one piece of it. The economics of extracting it is the second piece of it. None of that matters if the policy doesn't allow for it to happen. So the more data we get for how available that is, and this is something everybody in DC is aware of. DE is aware of it. I personally actually think they have skipped the second step in this process, which would be ensuring. Reality of this is we used to be good at this. We're not very good. I mean, you know how long it's going to take to. So I'll give you an example. China does not produce 50% of the world's lithium, but they control the market on over 45% of the world's processed lithium, which means they control the lithium market. Like, so there's the mining part of it, and then there's the actual processing part of it. And I'm hopeful that the smarter people in making this policy are talking about friendshoring, which is like Canada, Norway, different places like that. Like if you go to South America, there's only 2 countries that are mining in South America, Canada and China. And outside of like a World Series rivalry and other things, we would prefer we would prefer more mines in South America or Canadian than Chinese. And then the second part is if we have enough of this, we're going to have to make some, the legislatures get, that's why it's important they know what we have from the resource, because the policy in this and the litigation in this is going to be pretty significant.
Thank you, Governor. I have just a couple more things, just a preview for next meetings in December 11th. It'll be a full agenda. We're going to have Mineral Tracker here to present on the mineral valuation for the land board. Ed Bailey will be here presenting on the audit. We're going to have our surface auction report, and then we're also going to have an investment recommendation. So it should be a full but good agenda. And I would also like to echo a thanks to Superintendent Isler for her years of service on the board, and congratulations on your new position. And we look forward to seeing what you can do at education to help with collaboration between the states and the federal government on education. So
I'm excited. I am.
I'm assuming you won't be
So-
here at the December meeting.
Gosh, I hope not, for all the people that are depending on the federal government. So, which is a problem in and of itself, right? But that's another conversation. I know we didn't get our financials, but ballpark, what is this trust at?
Common Schools Trust Fund will be right around $8 billion.
That's what I thought.
Preliminary numbers, we started the last fiscal year at about 7 billion. And in 1 year, it grew about $1 billion to $8 billion.
So I remember it was probably my 4th or 5th land board meeting, and it was a huge celebration because we had just topped the 1 billion mark. And here we are. So keep up the great work. It's really helping kids. Our investment in education, the state, when I first started, the investment of our state was just at 900 million for a biennium. And in the 13 years, it's now at 2.7, I believe, a biennium. So more than doubled. And so much of that is because of that this board is. So thanks.
Thank you.
Appreciate it.
Thanks, Kirsten.
I wish everybody always said these nice things about you before. You really.
Oh, yeah. No.
Everybody misses me. You weren't that nice to me when I was there. Meeting is adjourned. Thank you, everyone.
Safe travels.
Thanks, everyone.
You have plans to